Hey everyone, doing another video today, February 23rd, and this week, today's Tuesday, we've had 2 days of weakness, and the reason it's significant is what I will cover. I'm going to cover Tesla, Apple, Bitcoin, and I want to cover basically my moving averages that I'm looking at, the line in the sand, and where I would call the trend intact above this line, and if it breaks significantly below, I'm going to call, for me personally, that trend is now changing. So I'm going to start off right here. If you look at the Tesla chart, my 65-day moving average, that's what I find gives me the clearest picture, and I only have the 65-day moving average. If you look at Tesla, we have broken the line. The moving average is now above. Now, it will take a few days, maybe even weeks, to find out if we hold this level. If we hang around here, we can still go up from this level, or over time we can slip and lose it. It will be hard to say, but this level here around 700 and change should act as support. If it doesn't act as support, well, that would be bad. The next level of support will be around that 400 level. You can't see it because my head's in the way, but somewhere between the old high at 500 and the old support at 400. So we don't want to see it lose this level, of course. I do think that in the end it will lose this level, and I'll show you why quickly at the weekly. If we look at the weekly, we've just had a huge run, and after a huge run like this is around the 80-90 level to 900. It would be normal for a pullback of some sort, just to have profit taking and to kind of reset the bull trend. I do think that we could see something back into the 400 level potentially. That's my concern. So that is Tesla. If you look back at Apple, something similar is going on as well. We are testing the 65-day moving average. We are seeing weakness. Now, Apple's a good example. It has happened before, and Apple shares, as well as tech shares, did recover the trend and did continue to go higher. So, in the next few days, we'll find out if it holds that 117, 120 level. That's where I would have stop losses somewhere around here. Two strong bear days from here would confirm a decline. Between 113 should be the next 113, 115 should be the next level of support. So we would not want to see a break below that level if you want to continue to be bullish. Let's look at the weekly chart. And the weekly chart gives us a nice clean view. We have a strong trend at that green line, so that will be a great place to re-enter if we see a sell-off in this wonderful bull trend that Apple has had. So 125 now, we want to see it stay above that 113 level for the bull trend to continue. And then we have a quick look at Bitcoin. Bitcoin on the daily. Bitcoin on the daily has not sold off as much as some of the other cryptocurrencies. I'll cover those quickly in a sec, but it is only down, after such a run, it's only down 17%, which is not a lot when you think about it. From even this last V dip, it's up 89%. So that is not a correction. I mean, it is a correction because it's over 10%, but it's in relation to the true range of Bitcoin, it's not significant. The bull trend is still intact, and it would stay intact until below 40,000. So 37,000 is still an uptrend. I'm not in this, but if I were in this, I would want to have stop losses somewhere around 41, 42 if I was still in this. Ideally, you would have taken partial profits along the way, but I do believe Bitcoin will give another opportunity to participate on the upside. On the weekly chart, this is what I'm looking at. So this green line ends up being like the 250-day moving average, which would be a strong support level, but that's over in the 15,000 level. So there's a lot of space between how high they've taken Bitcoin to where the support buyers will pick it up. And if you look back on the weeklies, when Bitcoin does sell off, it does seem to hold that moving average at the weekly time frame and even go below it. So it does sound really ridiculous to say that the support worst case would be around 15,000, but it's been proven to be a significant support level over time. So that's what I have so far. Just real quick, this Bitcoin, I really do think it's gonna test these old highs, and then we'll take a look and see what it does. So I would be careful in trading this Bitcoin going forward. The ETH USD, the Ethereum, is another example. That one is worse off percentage-wise. Litecoin is really close to that 65-day moving average. It needs to hold that moving average to continue to be bullish. And then, did I see anything else? I'm just throwing out some of these cryptos that are widely followed. Okay, and the other thing that I would recommend people watching is the dollar. Dollar and bonds, they're trading together. If the dollar keeps, if the euro keeps rising, that's good for risk, and that would mean things are still bullish, investors are still bullish. If the dollar gets strong, the other case would be true. So we're kind of in that line in the sand right now. We're at the 65-day moving average on the dollar. And it's coiled up and it's waiting to find out which way it's going to go. The next wave is going to be determined probably in the next week, maybe the next 2 weeks. Okay, I do think they're going to try to take it higher, but I would not be buying the dollar until it shows, because it is in a downtrend. Would not want to be a buyer until it proves itself. And then, although I generally dislike most stocks right now because of the current action, I'm still a fan of the energy sector. If you look at the broad market, the SPY on the weekly, of course we know the market is up and significantly above the base moving average that I'm using, which is just the 65 period. But if you look at the energy sector, it's not as high. So I am still a fan of energy, and I would be buying energy going forward. That is a sector I do like over the long run, especially compared to other markets that are more richly valued. And then I have here let me see. So I have the sectors. I have the 10 sectors, 11 sectors of the market. And if you group the different sectors, they all look quite expensive, obviously because of the health crisis. Forward PE also looks expensive, but if you rank them high to low, energy is at the bottom. So that's one of the reasons, if I had to be in something, I would be looking at energy. And then if I sort this by market cap, look at these PEs, they're very high. Let me sort large mega PE. Yeah, I would just be very careful. The market is not cheap. It's been up quite a bit. Close that. Market has been up quite a bit, especially the nano caps, small caps, micro caps, all these riskier companies. The large and mega have been up over 20% still, even with today's selling. This week and last week has been selling. And the valuations, price to earnings, are over 20, all of them. So 20 years of earnings to get your money back based on the, break even using PE. 10 to 15 is more attractive, and we're seeing over 20, over 30, and even as high as 60 forward PE. So that's what I see so far. I would be very interested to see how the market's going to behave in the next few days. Let me look at the futures real quick. On the daily, yeah, nothing yet so far. It's the afternoon and evening trading. We had that sell-off all morning, and then we rebounded towards the end. So we'll have to wait and see how it plays out. Be safe. Don't risk any money you can't afford to lose, because it's going to be a while in the next 2 weeks or so. Cheers.